Welcome to FT Markets. In just a week time, the US Federal Reserve will decide whether or not to raise interest rates for the first time since the financial crisis. But today was the Bank of England's turn to move, and well, it kept interest rates on hold again. Discussing this with me today is Giles, our economics editor here at the FT. Now Chris, so again, no action from the Bank of England, 8-1 majority for keeping interest rates on hold. Will they ever move?
Well, if you were a betting person and you thought they would move, you'd have been wrong a lot of times. I mean, ultimately, if the economy keeps improving, yes, they will, but they're sort of running out of reasons why not. So I think, yes, they will move, but they're still going to want to see pretty strong evidence that they won't have to reverse it. That's where they think they are now. So they want to see more strength in the labour market, more reassurance about the global economy, and a feeling that inflation is going to get back from the current rate of roughly 0 to roughly the target of 2%, with maybe a possibility it goes higher than that.
Now there are some issues also about the domestic economy. We saw manufacturing is weakening a bit on the back of a strengthening pound. Was there any sign of concern by the MPC on this domestic news, or was it mainly about the turmoil in global markets they were worried about?
I think the two bits of news in there was, first of all, they said they weren't too worried about the global turmoil. They were certainly buying time. They're saying at the moment they don't see any reason in particular why that should have an effect on their decisions. And in the domestic market, they saw it a bit of one and a bit of other. Particularly, they don't really know how to interpret the labour market at the moment. That's the big question for them, because some people see the rather good news we've had of increasing productivity in the second quarter as a reason not to move. Other people see the rising wages as a sign that maybe the labour market's getting tighter, it's harder to employ people, and wages are going to rise, and therefore prices are going to rise. So that really, the jury's out. We don't know the answer to that question, which of those two things is it, and they're going to wait and see.
And what about the Fed? Now, Mark Carney last month at Jackson Hole made it clear that the Bank of England still has power to control interest rates here and is not a satellite, as it were, of the Fed. Do you think that's true, or do you think the Bank of England is kind of looking quite closely at what the moves in the US are?
I would take anything that any Bank of England official says about not looking at the Fed with a massive pinch of salt. They're looking at the Fed extremely closely. It's one of the big uncertainties in the global economy, and therefore it has effects on the UK too. I would be very surprised if the Bank of England moved before the Fed. About a year ago that looked possible, but now it looks essentially impossible. So I think Mark Carney protests too much. We know already that long-term interest rates in the UK follow US long-term interest rates very closely. And I think increasingly there are signs that because the economies are sort of a little bit in sync, unless they go massively out of sync, short-term interest rates, the interest rates controlled by the Bank of England and by the Fed, will follow the Fed as well. And
finally, just how are investors taking all of this? What are the kind of market expectations on what the Bank of England will do?
Well, the market expectation is has looked at the global economy in recent weeks and the turmoil and the slowing China, and I thought actually when Bank of England officials said maybe around the turn of the year was the time to think about raising interest rates, they were saying actually I think the Bank of England will wait a bit longer. So the market thinks about midway through 2016. Now that is not going to be changed particularly by the September decision, because there it was a bit of one and a bit of other. On one hand they were saying that global turmoil doesn't affect us, on the other hand they said there was really no reason necessarily to take any action now. But the big message, exactly when they move, it's obviously a very important decision, but the big message is when they do move, they're not going to move very fast and they're not going to move very far.
Well, thank you very much, Chris. So we don't know very much about the exact timing, and we haven't learned very much today, but this is an issue which is going to be with us for a long time.